So I've taken a short on pound dollar at around 1.3055, aiming for this New York Open, and stops. I've given myself some room at 1.3067, so essentially a 1-to-1 trade. The trade is based on the fact that I expect price to come up to this high, this 240 fair value gap around this zone, above the 618, but before price reaches up to that level, I anticipate price to pull back into this range. Potentially, ideally, I would like to see price take out this low, find support, and then push up. But we'll see. That's why I'm taking targets earlier, because it might not reach down to the low of that Asian session. The entry is based on the fact that we started to accumulate here. We closed below a swing, so there's a market structure shift, which price failed to hold, and then aggressively pushed up, and then held the fair value gap. Tapped into this 15-minute fair value gap in above this 50% off the 240 range, and after seeing that, that was enough confirmation for me, and also the fact that price is diverging with EU. So with EU, so here EU made a higher high, right there. Pound dollar also made high. However, EU failed to push up one more time, whereas pound dollar pushed up at the same time, and that was a confirmation for me that price could potentially find some kind of resistance at that level, and push down to gather up liquidity before pushing up, which might all happen during London session. So I will also be looking to go long around the fair value gaps in this range's discount, or more likely I want price to take out the low of this swing before finding some resistance, some support, and that's the trade, and let's see how it plays out. So price has started to displace down, because this is a strong displacement. I've moved my stops to break even. Ideally, price should not come back up to this high now, unless it's coming back to take out the highs and push up, up into somewhere in this fair value gap, or take out these highs below that 240 fair value gap. So for me, the move has already been made for my trade, so I'd rather put my stops at break even now and just let the trade play out. On the 60-minute, we've got these two fair value gaps. Ideally, I do believe price will tap into at least the 50% of the second fair value gap, so I can move my targets to that low, which also happens to be a bit more reward. But I also believe that, I do predict price might come down to these lows, take out these lows, and find liquidity above that fair value gap, and that would be a trade to go bullish on. And ideally, I do want price to come down to that level, so maybe I'll take target ones off at the 50% of this fair value gap, and then let the rest of the trade run out to the low of this swing. So after price started to displace bearish, I took target ones off at this level, which gave me a 1.13, so almost a 0.5R with that half position off. Then price pulled back into that 618, right? It pulled back to the 50% first, pushed down, didn't take out the low, and then pushed back up, and then held these fair value gaps on the 5-minute and also on the 15-minute, I believe. Yep, held it on that 15-minute as well, and then price started to displace with further fair value gaps, which price comes into and taps into. And I was was watching this, thinking I could add position there with target one, probably these low or down here. Anyway, as price started to move down, and as price approached this 60-minute fair value gap 50%, so consequent encroachment of this fair value gap, I took off the rest of my position, mainly because I started watching this from a higher time frame perspective, just to see where we are. And as you can see, right, we are in a bullish order flow. We have pulled down into a weekly time frame fair value gaps consequent encroachment, which also happens to be a daily time frame fair value gaps consequent encroachment, which is the third one. So we have the first one there, second one there, and the third one, which is quite deep into if you take a range from here, it's deep in the range, but if you take 50% of this range, it's still in the premium. But these are quite a significant, them two fair value gaps provide a quite significant point of interest for price to find some support. And the day before, we also had a candle which wicked above the previous day and below the previous day, which could also be a turning point at significant POIs. So that's something to consider. So we took out the list liquidity before entry, displaced with these bearish candles, right? So I was anticipating price to pull back into 618 somewhere here, and then find some resistance and then push down. But because I took target ones there, I took out 1.5% overall, and the fact that I zoomed out into higher time frames and realized where we are, and the fact that this candle, the way prices is starting to pull back, with this candle not being the strongest looking bearish candle, I changed my bias and I stopped looking for any shorting opportunities. But however, I was waiting for a long opportunity. Had price taken out this low right there from Wednesday 10 p.m. If that had been taken out, then I would have looked for long opportunities. Then price pushed up, after failing to take this low, pushed up, wicked above London high, pulled down during New York session, and then it's continued higher. So had I been waiting for, I was waiting for the price to reach 618, I would have not even gotten an entry anyway. We came into the daily time from order block on Friday and rejected with a strong pin bar. So yeah, we never really came down. We just continued to displace bullish with the strong bullish fair value gaps. So it doesn't always come down to, as I was predicting price to take out liquidity off the low here inside this 60-minute fair value gap. We never got that, and price continued higher. So luckily I did see the fact that price was, this 60-minute fair value gap 50% was good enough zone for me to take targets, and I did. And that's the trade.